At the time of this generation, the U.S. markets are open and active, and Datavault AI Inc., trading under the ticker symbol DVLT, is currently exchanging hands at $1.81 per share. The stock is undergoing significant intraday pressure, down approximately 13.8% from the previous close, reflecting a sharp disconnect between the company's recently aggressive press releases and the market's immediate digestion of those claims. We are seeing volume already pushing past the 450,000 mark in the first hour of trading, indicating that traders are actively fighting over the direction of this trend. When you see a ticker like DVLT, which sits squarely in the volatile intersection of artificial intelligence, Web3 data monetization, and legacy tech pivots, the expectation is usually one of high beta momentum. Investors expect that if the company says the word AI, the stock should fly. That is the expectation. The reality, however, is far more complex and frankly much more interesting. The reality is that Datavault is currently staging one of the most aggressive, complex, and arguably confusing corporate metamorphoses we have seen in the small-cap space this year, involving everything from Bitcoin-backed equity deals to meme coin dividends. The market is selling off today not necessarily because the company is failing, but because the complexity of what they are attempting to pull off is short-circuiting the standard valuation models used by retail and institutional algorithms alike. We need to look closely at why a company that just raised its 2026 revenue guidance to $200 million is trading red today, and whether this is a discount on a future giant or a warning sign of a narrative getting ahead of the numbers. To understand the movement we are seeing right now, you have to peel back the layers of what Datavault actually is, because the AI in the name acts as a bit of a camouflage for a very specific type of financial and technological engineering. Most people looking for investment help or browsing investing sites see the name Datavault AI and assume it is a pure-play software company building large language models or chatbots. That is the common ground belief, but if we challenge that, we find that Datavault is actually the rebranded evolution of WISA Technologies, a company that was originally focused on high-definition wireless audio. This pivot is crucial to the current stock price because the market is constantly trying to figure out if this is a genuine tech breakthrough or just a legacy company trying to catch the current hype wave. The drop to $1.81 today suggests that despite the flashy headlines, the prove-it phase has begun. The selling pressure we are seeing this morning is likely a reaction to the sheer density of news flow, specifically the deal with Silex Holding Company. This isn't your standard cash-for-stock transaction. We are talking about deals involving pre-funded warrants and payments made in Bitcoin. When a company starts integrating cryptocurrency assets directly into their balance sheet maneuvers and equity financing, it introduces a layer of volatility that scares off traditional conservative capital while attracting the high-risk, high-reward crowd you might find discussing Robinhood stock trading strategies or speculative Robinhood crypto plays. The market hates uncertainty, and while Bitcoin is an asset class, using it as the primary vehicle for corporate financing in a small-cap AI stock creates a double beta effect. The stock is now correlated not just to the success of its AI platform, but implicitly to the sentiment of the crypto markets as well. Let's look deeper at the price action on the chart today. The stock opened near $1.81 and has struggled to find a bid higher, effectively gapping down and sitting heavy. This $1.81 level is critical because it represents a test of recent support zones established before the last leg up. If you're using a Fidelity trading platform or watching the Level 2 data on Interactive Brokers, you are likely seeing a stack of sell orders sitting right at $1.85 and $1.90. This overhead supply is coming from traders who bought into the hype last week when the company announced that massive guidance hike. We need to talk about that guidance because it is the elephant in the room. Datavault Management came out and said they expect 2026 revenue to hit $200 million, a massive jump from their previous forecast of $50 million. In a rational market, a 4x increase in guidance should send a stock parabolic. So why is it down 13% today? This is the tension between expectation and reality I mentioned earlier. The expectation is that guidance raises equal stock price raises. The reality is that smart money is skeptical of how that revenue will be achieved. When a company with a market cap of around $500 million and negative earnings per share promises a sudden explosion to $200 million in revenue, the market demands to see the receipts. The drop today is the market saying, "We don't believe you yet." It is a show-me flush. Traders are exiting positions to wait for concrete earnings reports rather than relying on forward-looking statements. This skepticism provides a fascinating entry point for analysis because it separates the gamblers from the researchers. If you are sitting there with your Schwab Intelligent portfolios or managing a Fidelity brokerage account, you are taught to look for fundamentals. The fundamentals here are messy. The company reported a loss of $0.33 per share recently. They are burning cash to fund this pivot. However, the bull case, the reason you might still be watching this video and the reason the stock hasn't collapsed completely is the data monetization asset. Datavault's core thesis is that in the age of AI, data is the new oil, and they possess a platform that allows companies to value and monetize their data sets. They are trying to position themselves as the NASDAQ for data. If they can actually pull this off, if they can become the clearinghouse for enterprise data valuation, then that $200 million revenue target isn't just a dream. It might be conservative, but that is a colossal if. The market is currently pricing in a high probability of execution risk. This is why we see the stock chopping around $1.81 rather than soaring to $5. It is a binary bet. You're betting on whether the management team can translate complex intellectual property and patent portfolios into cold, hard cash flow before they run out of runway. And speaking of runway, we have to discuss the meme coin dividend. Yes, you heard that correctly. The company has been involved in news regarding the distribution of a Dream Bowl 2026 meme coin. For the serious investor using Fidelity Wealth Management Services or someone focused on Fidelity mutual funds, this sounds absolutely insane. It sounds like a gimmick. And frankly, it might be. But in the modern era of Robinhood investments and SoFi Invest social sentiment trading, gimmicks can sometimes drive liquidity. By attaching themselves to the meme coin narrative, Datavault is explicitly signaling that they are trying to capture the attention of the retail army. They are trying to weaponize the enthusiasm of the Robinhood app user base to create a floor for their stock. It's a dangerous game. If it works, they get a loyal army of shareholders who refuse to sell. If it fails, they look like a company that isn't taking its fiduciary duty seriously. The drop today suggests that perhaps the institutional investors, the ones using interactive brokers' trading terminals and institutional algorithms, are voting no confidence in the meme coin strategy, while the retail bid hasn't shown up in force yet to support the price. I want to pause here and ask you a question because this specific detail is so polarizing. Comment below. Do you think a serious NASDAQ-listed AI company should be issuing meme coin dividends? Or does that make you want to run for the hills? I want to know if you see this as brilliant marketing or a red flag. Continuing with the analysis, we have to consider the macro environment. We are in a market phase where unprofitable tech is on a very short leash. Interest rates are not zero anymore. You cannot just float a story stock for 5 years without showing a path to profitability. Datavault's recent financing with Silex, while providing necessary capital, also raises questions of dilution. Every time a small-cap company raises cash, existing shareholders get diluted. The fear of future dilution is a heavy anchor on the stock price. When you see a stock down 13% on a day with no specific catastrophic news, it often means the market is pricing in a shelf offering or some future capital raise. Investors are front-running the potential for more shares to flood the market. This is a classic pattern seen by anyone familiar with self-investing or managing an individual brokerage account. You see the good news, you see the price drop, and you realize the market is sniffing out a secondary offering. But we must also look at the technicals of the Web3 aspect. Datavault is heavily leaning into the idea of digital twins and blockchain-backed data. This sector has been cold for a long time. The NFT craze died, the metaverse hype cooled. By pivoting into this space now, Datavault is effectively being a contrarian. They are betting that the next wave of AI will require blockchain for verification. Think about deep fakes. Think about AI hallucinations. How do you verify